Hey guys, it's Sasha. The UK government borrowed £20.7 billion in June, which was £3.6 billion more than they thought they needed to borrow. And it's the highest amount borrowed in June ever since records began, excluding 2020. The interest on government debt alone was £16.4 billion. And you can see the problem already. The government borrowed £4.3 billion more than just the cost of the interest on the debt that they already have. So they borrow money to pay for the interest on the debt, not to repay any of the debt, just the interest on the debt. And then they had to borrow even more just to pay for the day-to-day running of everything. In recent weeks, the UK government has tried to adjust a few small costs here and there in the budget, nothing major, but even then they had to do a U-turn on pretty much every one of those major adjustments. Most recently, they tried to adjust a tiny portion of the welfare spending and then ended up going back on that too. And the problem now for Rachel Reeves is that after dallying around for over a year and doing absolutely nothing to actually get the economy growing, the problem is now getting worse every month that she continues to do nothing. Dear UK government, every month that you do nothing, which has been the policy in terms of for growth, nothing, you are making this problem worse, a lot worse. You have to take urgent action. And by urgent action, I mean you have to go and pass an emergency budget, like now, this week, maybe next week if you need a bit of time, with relatively significant changes to the direction in which you're going, or this whole thing is going to sink. The UK Parliament is due to break up on the 31st of July and go on a month's holiday. I know you probably take an entire month holiday if you work hard, but the MPs, they work so hard, they need a whole month off. The summer. Why would you work in the summer? Every single MP, every single member of the House of Lords gets to relax, not have to turn up in London for an entire month. The economy in the UK is imploding. Borrowing costs are spiraling out of control. We've had the biggest job losses since the financial crash. In some ways, they are worse than they were in the financial crash. And as per usual, the Parliament just decides to continue. Go ahead, take the entire of August off. Who cares, right? What the actual fuck is this? I just genuinely don't understand. If my business was failing, right? If my business was financially in really big trouble, borrowing was spiraling out of control, I needed to borrow money just to pay interest on the money that I've already borrowed and then borrow a bit more just to pay the wages, right? If I was unable to pay my bills, there is no world in which I, as the person running the thing, would just go and take a month off and ignore the problem. So why are we okay with the government just fucking around and doing it? I don't understand. But here is why this borrowing figure is a really big problem. Let me explain, because once you see why, you will be fuming. I'm sorry, but you will be like I am. And I can tell you now. So the latest forecast by the Office for Budget Responsibility was made in March this year, 4 months ago. Right? 4 months ago, the people who work at the OBR, who pretend to understand finance, forecasted that the borrowing and spending for the next few months, for the next 5 years, would be whatever. They did the numbers, and they said that in 5 years' time, they forecasted in 5 years' time, the gap between what the UK will bring in through tax receipts and the money that would be spent by the government, excluding investment. I've talked about that before. But the difference between those two things over the course of an entire year would be positive, would be £9.9 billion positive over the whole year. You can see it in the chart in this report. So this is their forecast for what will happen in 5 years' time. And now just have a think, like, what is the error? And what is the actual likely outcome? Because we're now 4 months out from the forecast, not 5 years, just 4 months out from the forecast. And in June alone, in 1 month, the UK government borrowed £3.6 billion more than in that OBR forecast from March. So 4 months down the line from the date of the forecast, they were already out by £3.6 billion in just 1 month. If you annualize that, that's an error of over £43 billion. I said it when I looked at their analysis back in March, and I will say it again. Those numbers are complete bullshit. They are government propaganda. The UK government is actively lying to everyone about the forecast, about the data. Last year, the total deficit in the UK budget was £137 billion. So that annualized number from June is an error of about 31% relative to the size of the deficit, just so that we can get some kind of sizing, some kind of perspective. I genuinely don't know how it is possible for an entire government department, we're talking like hundreds, I don't know, thousands of analysts, computers, like spreadsheets, running around, and they have an error which is 31% off whatever it is they're forecasting 4 months after they made the forecast, having known in advance all of the numbers that go into the forecast. If I made a forecasting error of that size as an analyst working for like any company, I would be immediately fired for being really shit at my job. And what level of confidence do you have in that 9.9 billion net positive margin number for 2030? Well, I don't have any. When they're already out by 4.5 times that much 4 months in. But let me show you some of the detail because it really helps explain what is actually happening with UK finances, why we are in this problem. So this table shows how much tax the UK government brings in every single month, split by the type of tax. And you can see that in June, they got £95.4 billion worth of tax, which is £6 billion more than in June last year. But they still had to borrow a record amount of money in June anyway. And naturally, because of wages growing, because of inflation, you would expect taxes to grow too. Now, over the last year, wages have been growing by an average of 5 to 6%, according to government data. So if everything else was steady, if nothing else changed, and the spending just went up proportionally to wage increases, roughly. So, other taxes like VAT would also go up, not as much, but a bit, right? Because people have a bit more money and prices go up because of inflation. Well, then the tax receipts would have gone up by about 4 to 4.5 billion pounds naturally. But they went up by 6 billion pounds. And if you look in the table, you can quickly see why. The social contributions line has gone from being at 14.3 billion last year to 17.4 billion in June this year, a 3.1 billion increase. And there are two major problems with this number. The first is the obvious one. 3.1 billion on top of a previous bill of 14.3 billion is a 22% increase in 1 year. I remember I made a video explaining how drastic these employer national insurance contributions would be for employers, and a lot of people I think didn't really understand because it's only going from 13.8 to 15%, and the cap is dropping a little bit. But when you work out what that actually means, the impact to employers is insane. It's much, much, much worse than what the media was reporting at the time and what the government was making out at the time. And here we are. The numbers are in. The national insurance payments are up 22% in the last year. That is the real impact that businesses are feeling. Look at the data. See how these payments were relatively consistent last year? And then we had this jump in March, which happens every year because it's the end of the financial year. And then look what's happening right now. The moment that the employer national insurance comes in, suddenly the amount of tax blows up. The second problem with this national insurance is this. The total tax take went up by about £6.1 billion. If it went up roughly in line, right, with the increase in wages and inflation and so on, but maybe a little bit suppressed because things in the economy are not going up at the speed of wage increases, well then the tax take would have been maybe, let's say, around 4 billion roughly. But now we know that 3.1 billion of the increase came from just the increase in the employer's national insurance. So if that increase in employer's national insurance, the 3.1 billion, did not happen, well then we will be seeing a 1 to 2 billion pound hole in the tax receipts after adjusting for wage increases and inflation. So that's about a 2 to 3% drop. And that is really, really concerning, right? Because these tax receipts would suggest that the UK economy is actively contracting in the real world in terms of what we're seeing. The amount of revenue being collected by the government through taxes, which is taxes on employment, taxes on spending, taxes on people using services and products that companies sell, right? That number is going down in real terms. But remember, after the increases in wages and after everything else, it is still growing a bit. So if the tax income is growing, right, where is all the money going? Why did they have to borrow all this money? Why did the UK government have to go and borrow over £20 billion if the tax receipts are going up? Well, look at this table. The total amount spent by the government in June was £116 billion. That number has gone up by almost £13 billion from June last year. That's a 13% increase in spending in 1 year, which seems like a lot, right? We have a little bit of a spending problem here. And then to the left are all the components of that spending. And look, the very first column is where the money is being burnt. Central government spending is up by exactly the same amount, £13 billion. So let's go and follow. Where is the money going? Well, the government is telling you that this is because they are doing so much investment. They're investing in infrastructure. They're doing all that stuff. Well, investment spending hasn't actually gone up. And actually, news did come out today that it will be going up because the UK government will now borrow £37 billion to fund the development of the Sizewell C nuclear power plant. So the UK government is going to be borrowing a lot more money in the coming months. By the way, in case you're confused about the funding structure for this new nuclear power station, the official estimate from the government is that the total cost of the building of this thing is going to be £38 billion in 2024 prices. The UK government is putting up £37 billion out of the £38 billion total. This data, all of this came out earlier today. You can look it up. And for the privilege of providing 37 out of £38 billion, the UK government will get to own a, drumroll, 44.9% stake in the reactor, with various energy companies, of course, including Centrica in the UK, different French energy companies, they will own the rest. Makes perfect sense, right? The UK government is really great at doing business and negotiating. Well done. Get a gold star. But anyway, back on the main topic. We know that the £13 billion in June was lost somewhere within the central government spending. So here is the breakdown of central government spending. And look, current expenditure has gone up by £13 billion. So that's where the money is going. Let's continue following the trail. So here is the current expenditure part of that previous thing that we were looking at. And can you spot the really big difference between what happened in June last year and what happened in June this year? Does anything in this data stand out to you? Well, the answer is, of course, that last column to a very large degree. Interest. Other things are going up, but that one's just blown up. Interest payments on debt have gone up massively for the UK government. More than half of the increase in spending is coming from this extra £8.4 billion spent on debt interest alone. Now, this number is volatile. It's important to remember that. So just because it's exploded in June does not mean we'll see the same thing in July. It all depends on which months, which gets of which past maturities that were issued 10, 20, 30, whatever years ago come up and therefore have to be replaced for the government to, continue essentially owing the same amount of money. But the reason that interest is jumping so much is because the market has lost confidence in the UK economy. That's what's happening. The Bank of England has been reducing interest rates, but it doesn't actually matter what the Bank of England interest rate is when it comes to what the UK government is paying for interest on its debt, because that rate is just set by the market. So each month, the way that the government borrows is they go and sell gilts, which are just bonds, right? And if people don't want to buy the bonds, let's say the bond pays just 1% interest, and everyone's like, I don't want 1% interest, I'd rather invest in the stock market, I'd rather invest in something else. Well, then the government has to increase the interest that they pay. And so if not enough people are interested, they keep having to increase the interest rates. And that's what the bond yields essentially are. And now we're seeing that the Bank of England rate is going down, but the interest that the government has to pay on bonds is going up at the same time. And this is because the market thinks that the risk of the UK government fucking up and completely destroying the economy is going up. They think that the value of the gilts collapsing at some point is slightly more likely than it used to be. And the biggest problem of all now is that productivity in the economy is falling. That will mean, in real terms, tax receipts will be falling too. Whatever taxes that the government chooses to push up in the next budget, because that seems to be the only solution that they can think of, will slow down the economy even more, which will lead to even worse tax receipts. They will have to borrow even more money. It's a completely self-destroying spiral. The fact that this is not obvious is kind of confusing to me. The only way to get out of this mess is growth. if the UK does not suddenly do a 180-degree turn and suddenly get growth back in the economy, we are fucked. There's like no two ways about it. But sure, let's spend a month debating whether we can cut the welfare budget by £5 billion a year in 5 years' time, and then have to borrow another £3 billion extra per month because the Chancellor did not spend any time actually solving the actual problem that we have in the UK economy. The actual problem is not that we don't have enough tax. We actually pay a reasonably high level of tax in the UK compared to many countries. The actual problem is that the economy has not grown in 6 years and is now contracted for 2 months in a row. But the spending part just keeps growing and growing and growing. Massive freaking public sector wage increases, massive new spending on every single count that you want. The welfare budget has absolutely gone nuts in the last 6 years. But don't worry, the government will now go and take a month off. They'll not bother turning up to work. They'll enjoy their time in the sunshine, sipping pina coladas. I have no words.